Here is the context: corporate greed. So you either come across somebody, or who knows, maybe you believe in corporate greed. You believe your claim is that a big reasoning for these higher prices, for inflation, is because of these big companies. They're price gouging, and they're doing all this just because, you know what? They're the companies, they're the corporations. They can move the prices to whatever they want. They're in control of the prices. So they're just raising prices so that they can pad their profits, so that they can make even more money because they're greedy. Okay, fine. That is a premise that I'm going to operate under. But under that premise, the one question that you can ask these people, or that I'm asking you as somebody that maybe does believe in corporate greed, is, do you believe in corporate kindness? So let's take a close look at two industries that I would argue under this rationale are, you know what? They are very, very corporately kind. So right here, let's look at televisions. And this is the history of televisions from 1950 to 2022. And as it says, and I'm glad that they note, this is all being used according to the U.S. Bureau of Labor Statistics. So, you know, the government data here. Prices for televisions are 99.18% lower in 2022 versus 1950. Between 1950 and 2022, televisions experience an average inflation rate of negative 6.45% per year. This rate of change indicates significant deflation. In other words, televisions costing $1,000 in the year 1950 would cost $8.22 in 2022. And then they have a nice graph here. Again, just to point out, this is from the US Bureau of Labor Statistics. And all the red represents when prices went down for TVs. I mean, look at all this corporate kindness. Look at these prices going down and down and down and down. And then for some reason, they just got, I guess, greedy right there. For 1 year, just got greedy in 2021. And all of a sudden, back in 2022 to being very, very kind with their prices. Let's take a look at another, what I would argue using the rationale, very, very corporately kind business. And that would have to be with cell phones. So from this site, they go over the cell phone history and just some actually pretty interesting stuff here to begin with. But you go down here, and the first portable cell phone was invented in 1973 by Motorola. And it was the Dynatec 8000X. The prototype he used weighed 2.4 pounds. The Dynatec phone was priced at $3,995, which is the equivalent of $10,000 today. And I don't need to go any further. You are well aware of that smartphones cost way less than $4,000 or $10,000 inflation adjusted. So let's think about how nice, how corporately kind the TV industry is, the cell phone industry is with this sort of stuff. I mean, not only are these products so much better, I mean, think about it, that phone weighed 2.4 pounds, $10,000. But now think about how, well, not heavy phones are and how much better they are compared to 1973. And you're getting them so much cheaper. Same with TVs. Think about it, black and white TVs, and now you have high definition, you have all these sorts of things. I mean, 4K, and they're always improving. And they're, 99% lower compared to when it was just some black and white TV? How kind of these companies. Unbelievable. They are so kind. And then let's talk oil companies, because they're really the whipping boy right now. How kind was it of the oil companies to say during COVID and during those lockdowns, hey, you know what? We know everybody's struggling out there. We're going to be kind. We're going to lower prices down, and we're just going to lose billions of dollars. And that is a fact. I mean, this is just because they're publicly traded companies. You can go and look, and they were losing billions and billions of dollars. So I guess that was very kind of them to, during those hard, rough times, to just say, you know what? We're gonna lose billions of dollars right now so that we can offer you much lower gas prices. I mean, how corporately kind of those oil companies. Now, you're going to be saying, and you're going to be right, Clay, that is a straw man. Because the reason why oil companies could not charge really high prices was, hey, Clay, you moron, there was this thing called those lockdowns. Nobody was driving. Nobody was traveling. Nobody was doing anything. So there was nobody there to buy the oil. And I agree. But that's not a corporate kindness argument, just like it's not a corporate greed. Because if it weren't a corporate greed, why would they do that? Why wouldn't they just raise prices up to whatever would cause them to still be making money? Why raise price, or why lower prices to lose money? It certainly wasn't because of corporate kindness, just like when they raise prices, it's not because of corporate greed. It's something that you've already identified when you say, Clay, nobody was driving. I agree. In other words, there was no demand. They had a bunch of supply, but no demand. In other words, I would submit to you that corporate kindness does not exist. Corporate greed does not exist. Supply and demand and competition exist. When you look at those cell phone and those TV companies, are they just like a bunch of, sitting around singing kumbaya because they're so polite and these companies, we want to be so, no. Or are they saying, you know what? We got to compete with Samsung or with LG or with Apple or with all these other companies, or else we're going out of business because they're offering cool products. And guess what? They even lowered the price on it. No, competition breeds lower prices. Because if you don't lower prices for good quality items, then you know what? You're probably going to go out of business. Just like in any other, but Clay, oil is a commodity. And that's a self-defeating argument because a commodity is at the core based on supply and demand because there's not really anything you can, now setting aside the fact if you could say, well, no, what happens if a company creates an oil that gives you even better or doesn't pollute? Okay, now all of a sudden it's not a commodity. That's something that you've just completely differentiated. But oil at the core is a commodity, meaning it's based on supply and demand. But that's all a moot point because at the end, now if you do say, and you come across somebody and they're saying, no, I believe in corporate kindness. Okay. Now I don't agree with that, but I do applaud you that at least you're being consistent in your rationale. But what happens way too often is this, and I'll just stick with oil companies. Oil companies are greedy. They just keep raising prices. Therefore, they were kind during those lockdowns. No, they weren't kind. Those prices were cheap because nobody was buying. Okay, so in other words, when prices go up, it's corporate greed. When prices go down, just supply and demand. That's confirmation bias. That's a very one-sided argument if you're going to use that logic. So that's why at the core, come across somebody and they believe in corporate greed. Ask them, do you believe in corporate kindness? Now, there are many examples out there. You don't have to use the TV industry or the cell phone industry. But in my mind, that's something that I think most people relate to. I suppose you could use computers or laptops or stuff like that. But there is a big difference between prices going up and prices going down and having to do with their attitudes. Because if you want to think that it's corporate greed, then to remain logically consistent, you got to say, okay, well then sometimes those corporations just get really, really polite, really, really kind to the point, especially those oil companies, of being willing to lose those billions of dollars during those lockdowns. So I hope this helps. I hope this gives you kind of a quick way to cut to the chase to, just give these people that believe in corporate kindness another angle to think about. And as somebody that, if you do believe in corporate kindness, or if you do believe in corporate greed and you believe in corporate kindness, then I have, like I said, I respectfully disagree with you, but I really I'd still want to be totally would want to be your friend because at least you're being consistent in your logic. But to sit there and proclaim prices going up, corporate greed, prices going down, no, that's supply and demand. That's competition. That's just one-sided, and it's too much bias in your opinion because you're trying to cherry pick and force some sort of narrative that's not actually there. So that's my thoughts on it. Use that one question, and it'll, like I said, be very, very helpful in any discussion with somebody that maybe has a different view than you do. So hopefully this helps. Hopefully it maybe gives you something to think about. If you enjoy these, hit that like button. Leave a comment down below. I'm not going to make any promises that I'm going to get into some epic debate with you. So if I just say thanks for watching, thanks for your thoughts, that's just me being polite because, again, I do have a life outside of this, as shocking as that is to believe. So I can't promise I'm going to get in total epic debate, but because I know some people will still disagree with this, and that's fine. But I think I present a very plausible, basic, rational argument. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.